It has been a while since I last updated about this ETF. This ETF is one of those income ETFs that are popular and a lot of people seem to like it. And today I'm going to give you an income projection of this ETF and I'm going to show you the overall return of this ETF and whether it's going to be an ETF for you to invest your money. If you put $25,000, you're going to get 1,185 shares and that's going to give you monthly income of $367 or annual income of $4,408. $50,000 is going to give you 735 and that's 8,815 a year. 75,000 is going to give you 1,102 and that's equal to 13,000. Now if you put 100,000, you're going to get 17,000 a year. The amount of money that I would say it will be comfortable for anyone to retire, maybe 300,000. That's going to give you 4,408 a month, and that's 52,891 a year. So that's a lot of money to invest in this ETF. But this ETF is a pretty solid. It's pretty much like S&P 500, in a way. But if you put 500,000, then you're going to get 88,000 a year, and that's 7,346. So 80,000. Let's say, for example, even if you pay 20% tax, you still will be able to retire with this ETF. But it has a great performance and lower volatility than actually ymax ETFs. But a lot of those ETFs we always talk about, for example, if you invested just 100,000, you'll be able to retire with ymax or Coney. Those ymax or round hill ETFs, they always have higher yield compared to this ETF. But you can also have this ETF as your balanced portfolio. Now, this calculation, I took all the distribution that they paid so far since the first time they paid September 30th, 2021, all the way to last year they paid December 31st, 2024. And of course, this month of January, between January 30th, they're going to pay another distribution. So if we take all those distributions they paid so far, we're getting 31 cents on average. Now, altogether, they've paid about $12.17. If you take that $12.17 plus the price of today, which is $21.10, that's going to give you about 33. That's a drip price. If you were to buy today using that average, it's going to give you only 18% yield. So that's very low for a lot of people. But however, this is a huge yield than S&P 500, for example. Remember, S&P 500 only pays like what? 2% or 3%, that's all, right? So it's still higher compared to other ETFs. I have a very important slide to show you, but before I show you that slide, which is more data and very important information, I'm going to read from a Simplify website, and this is SVOL, Simplify Volatility Premium ETF. So what this ETF is, for people who don't know, the Simplify Volatility Premium ETF, or SVOL, seeks to provide investment results before fees and expenses that corresponds to approximately 1/5 to the 10th the inverse performance of the SVOL Volatility Index, VIX, short-term futures index, while also seeking to mitigate extremely volatility. We believe many traditional sources of income are failing to meet investors' need in today's low-yield environment. SVOL aims to provide an attractive income stream and source of diversification while seeking to avoid the risk inherent in other income-producing asset classes. The fund shorts VIX positions provide investors an optimized exposure for monetizing the premium in the VIX futures market. A modest option overlay budget is then deployed into VIX call options to help protect against the adverse moves in VIX. So that's kind of strategy they use. Pretty much what they do is short VIX. So in short, this ETF actually short VIX, and VIX is the volatility index, of course. That's a gauge of volatility. Whenever you hear about, oh, there's a lot of volatility today in the market, of course, people look at the VIX. So whenever S&P 500 is, let's say, for example, 2%, VIX will be the opposite of that, will be a little bit lower or 1%. If the market does really bad, for example, S&P 500 is like -2, VIX always is a little bit up, +2, +3. That's all it is. So it's pretty much inverse of S&P 500. And this ETF, of course, just ride that volatility and ride premium using VIX. So it's kind of pretty cool, the strategy they use. Now let me show you the last slide. This is going to be a very important slide for you to make your decision if you're going to invest in this ETF. So Simplify Volatility Premium ETF, SVOL, price of today is 21.10. Now, this is a company overview. So market cap right now is 1.24 billion. PE ratio is 27. So it's pretty much similar to the S&P 500, but the 52-week range is between $19.41 to 23.14. Dividend yield as of today is 14.79. That's as of last distribution that they paid. But remember, I showed you on average is about 18% yield. Total return with a drip, meaning dividend reinvestment plan, if you take all the dividend reinvest back, right now you are up 42% and has returned on an annual basis about 10.14%. It's pretty much similar to the S&P 500. Total return with no drip is 32% in a year. So that's about 7.97. As I say, this ETF has pretty much return of the S&P 500. So if you want to make money and while I have the exposure of almost S&P 500, this is the ETF for you to invest your money. The share price right now is about 15% down. Dividend increase is 1.48%. This is a chart here, you can see it was all the way down. Let's say, for example, you invested $10,000 at the time of inception or when it started. By now, that $10,000 would have been about 13,000, actually 13,280. But with drip, you're going to have 14,000. So it's a pretty good. I mean, all in all, it has done well because it's gone up. So there's no NAV erosion on this ETF here. Now we look at the SVOL dividend payments and yield and share price chart. The yield went up for about a few months between 2021 to 2022. And then after 2022, it's pretty much flat. It just bounced now and then, but almost flat. They consistent between 30 to 25 cents. It doesn't jump as much as like ymax ETFs or round hill. Now with the share price has come down with no reinvestments. So that's the data I want to show you about SVOL because it's been a while since I last give you update on SVOL. So I just thought I would keep you an update on SVOL because it's been a while since I last made a video about this ETF. I just want to get your feedback. What do you think about SVOL? Do you think SVOL has a place in your high yielding ETF portfolio? So let me know in the comment below. If you haven't subscribed on this channel, please make sure you subscribe so you can get all the updates on these ETFs. And if you like my content, as always, smash the like button and hit that little notification button so you can receive all those notifications. Also, do me a favor, share with someone who you think this video might help. Till we meet again next video. Thank you very much for watching. Bye bye.